Hi, this is Jonathan Miller, and welcome to the What It Means podcast. For those of you that don't know me, I am the co-founder of the appraisal firm Miller Samuel, and started that about 40 years ago, which is kind of scary. I'm the author of the Douglas Elliman reports, which I've been doing for about a little over 30 years and I teach market analysis at Columbia. I've been doing that since 2018 for their Masters of Real Estate Development grad school program. And I'm the author of Housing Notes, housingnotes.com, which is a place I recommend you go and check out. I write usually 3 to 4 uh, pieces a week on relevant topics of the day that might help you navigate the real estate world. Um, this week, I want to focus on Canada, but before I go into that, I want to talk a little bit about a thing called price discovery. And I interact with a lot of real estate people in the real estate industry, brokers, developers, architects, people that are contractors, people that are, connected to um, the industry. And the feedback that I've gotten over the last 3 weeks, meaning nearly all of June, not quite all of June, is that there has been a noticeable slowdown or pause in sort of new deals, new information. And and actually in some markets, inventory has popped a bit, meaning, increased and contract activity is decreased. That doesn't mean the current data coming out, there's probably a lag. We'll probably see this in the month of July, when the month is finished, but we are seeing it. And I just wanted to sort of touch on what is price discovery. The way to think of it is when a buyer or seller interact and a buyer has access to, all the information about the property and is informed about the sort of macro environment, interest rates and the economy and all that. That's how the two parties sort of figure out what the price should be for the property. When you have a lot of sort of adverse factors out there, like right now, sort of the chaos of the whole tariff fiasco, in my book, um, uh, and a recent, the recent Iran-Israel conflict and the potential for more, although it doesn't look like it at the moment, but certainly a greater potential for additional conflict in the Middle East. You have people pausing. And so there is no price discovery. We don't know, um, sort of how this will play out. That's the uncertainty that I've talked about endlessly on this podcast. But the way to sort of think about um, this is I've had more than a couple, I've had quite a few agents and sellers, no buyers actually, but agents and people that have listed their properties are saying, hey, we've been on the market for a month and there's been very little interest, not much going on. And and if it were the case that other houses in the same market or submarket were getting offers on their properties or everything seemed normal, then that would tell me that the price of the property is inflated. It doesn't match what's going on with the market. However, if all the houses in the neighborhood or the submarket are not generating any real interest, and there's no real activity or people sort of floating around those properties, then that's something different. Uh, and what it means is the market is pausing, or there's a suspension in activity because of some kind of external macro um, threat or uncertainty to the market. And that's kind of what I'm seeing. I'm seeing, it's not that like one house is standing out, it's that there's a general slowdown. And I'm seeing this in markets across the country. This is not specific to Manhattan or a neighborhood of Manhattan, my company, my appraisal company, Miller Samuel, is based. But just this general idea that there's, we're at peak uncertainty and not much seems to be changing. Um, and in the fact that we've had, we could have, you know, 3.5 more years of this in the current administration, not to pick on them, but that's really where the uncertainty is emanating from. In fact, um, I just had a call from somebody in a market that, their house has been on the market for about a year and hasn't sold. And in that case, whether or not there's a pause at the moment, it wasn't priced properly leading up to whatever is going on right now is going on. But then I've had others where it's only been on for a month and nothing is moving. There's no real interest, no engagement by buyers, which tells me something else. And and I think, my advice to that people that are, just on the market and there's no interest, no activity, it may not be about the price. Uh, it's hard to tell, but we're in this sort of moment where there's a lot of uncertainty with what's coming out of Washington, and there doesn't seem to be any strategy or sort of direction or cohesive plan. So we're just sort of floating around waiting to see what happens next. And I think that's got, consumers um, in the housing market more cautious and taking longer to make decisions. So it may not be the price. I don't want to say it isn't the price, because in the case of the person I spoke to where it was on the market for a year and the marketing time in that location is, 60 to 90 days is the average, somewhere in that range, then it probably is the price. But right at this moment, there's plenty of examples where I don't think it is the price. I think it's just requires a little bit of patience. Um, Sometimes it's just not the price. Anyway, just an interesting perspective of what I'm seeing. The other thing I wanted to talk about, and sort of the theme of this uh, podcast, is about Canada. And I wrote a post on it um, uh, a couple of days ago called "The Reign of Error." Tariffs on Canada brought a sudden drop to New York City and Florida tourism. And this is something I've touched on in the past, but uh, there seems to be a correlation between international demand for a local housing market and tourism. And and what sort of generates the tourism is the weak. If the dollar weakens, then the buyer from Europe or South America or Canada enjoys a discount on their purchase price. The problem is that with the sort of very hard policies coming out of Washington on immigration, that is offsetting the weak dollar benefits. There's been a little uptick in international demand, but it's very nominal. It's still very low, especially given how weak the dollar has become in the preceding months. Um, and Canada is one of those places where it's been particularly noticeable. Um, the way to think about it is we've had, um, since the financial crisis, um, and then interrupted by the by COVID. In COVID, we had tourism just crushed lower because of the inability, travel bans on anything related to COVID. Really dropped airline traffic, tourism, etc. And New York City, which had been enjoying record tourism, lost a big chunk of that in during the COVID era, I call it, or the pandemic. But what we've seen is an incredible rebound all the way through 2024, where in 2024, last year, we were thinking about, in the context of New York City, um, we were thinking about 2025, we were getting back to parity with pre-pandemic tourism and probably setting a new record. In 2024, New York had like 64, 65 million visitors, which was pretty close to a record, I understand. But in 2020 and 2025 was forecast to be even bigger before the impact of the tariffs or the perception of the tariffs actually hit. And now New York City is forecasting about a 800,000 person or tourism drop in New York City, which takes a lot of sort of air or out of the sails of having some sort of record tourism number. And guess what? Most of those 800,000 visitors are Canadians. Canadians are providing a significant impact on falling tourism numbers. And even in Florida, uh, Canadians prefer the Gulf Coast. And right now, just one stat sort of jumped out to me. Canadian tourists that drive to Florida, so those are hardy souls because that's a long drive, um, more than 24 hours, I would imagine. Uh, they've dropped about 35%, and and the Canadian population is, very much aligned with the government in Canada in terms of sort of protesting the trade war that the U.S. initiated with Canada. And as a result, we're seeing on the Gulf Coast of Florida, we're seeing a lot more inventory there compared to the ocean side, um, because the majority of Canadian tourists tend to go to the Gulf side. And so I would think, and I've read, there's lots of anecdotal stories about people that are selling their longtime beach homes on the Gulf side because of this change in sentiment between two long trusted partners. I've always felt a strong connection to Canada. My mom was born in Montreal and became a U.S. citizen at 13. Um, when our four kids were young, all of our vacations were north to skiing during school breaks. My wife is from Michigan. We mutually love the cold weather, so we always went northward. One thing I remember when we were in Canada with the kids is all the KFC fast food chains were called PFK. And to this day, my kids we still laugh about that. Um, and, all the stop signs that were in French because we were going to Quebec, the French um, speaking province. I recently spoke at the Canadian House of Commons as an expert witness speaking about New York City real estate, and all the reality shows that are written about that you see all the time, like Property Brothers and I'm trying to think, um, uh, Love It or List It, or most of them are filmed in Canada. A lot of the production is in Brooklyn, but if you recall, a lot of these shows were showing flipping and everything while we were in our housing crash in 2008 through like 2012 or 2007 into 2012, depending on where you were in the US. And they were filming these things in Canada, and Canada didn't have a crash like the US did. Prices just continued to keep rising. Anyway, there's a connection with Canada. They're a big part of our trading. They're a trading partner, and actually they account for 13% of the foreign buyers uh, of U.S. real estate. So it's kind of a big deal, and we've been seeing international tourism led by Canada really fall off since the early part of this year, which is a concern. Canada provides 14% of our global exports and about 11% of our imports. So they're not a small part of our economy. I mean, this is just adding to the uncertainty of um, of people that are in the housing market right now. There's just a lot of uncertainty, and I hate to be redundant in saying that, but it's because there doesn't appear to be a long-term strategy. It's more of like a sidewalk brawl between two longtime allies, and I don't quite understand what the eventual outcome will go, other than it's evidence of the administration's lack of understanding of what a trade imbalance actually means. But this is nothing new. This is what I've been talking about um, quite a bit. And I actually the this Canadian situation I wrote fairly extensively in my housing notes last Friday, Thursday or Friday. So you might want to check it out at housingnotes.com. Um, anyway, I appreciate you spending your valuable time with me, and if I could implore you to always remember that pie is better than cake.